What's good, everybody? Welcome back to Investing Uncomplicated for everyday investors, making your money in the market make sense. Look, I got to talk to y'all about something that went down this week. This is about to change the way that American companies could potentially do business internationally, maybe forever. So you've heard of Nvidia, maybe you've heard of AMD. These are companies that are powering everything from your gaming setup to the AI running ChatGPT. They just made a deal with the Trump administration that's never been done in US history. They agreed to give the US government 15% of their revenue from chip sales in China. Not profit, but revenue. That's money off the top before they pay anything else. Y'all thinking this sounds like something that's a little bit over my head, like this some corporate stuff. I don't know how this affects me and my money, but check this out. This could be a template for how the government deals with other industries moving forward. So your sector, where you invest your money, those companies, maybe they're next. So let me break this down for you piece by piece, because what just happened is going to have ripple effects across the entire economy, potentially. All right. So let me paint this picture for you real quick, because this is some wild stuff that's going down, unprecedented. For the last few years, the U.S. has been restricting what technology American companies can sell to China. This includes things like AI chips, advanced semiconductors, and all that stuff. The official reason from the government is in the interest of national security. But the reality is these restrictions locked American companies out of one of the world's largest markets. And they want their money. So Nvidia makes a certain type of chip. AMD makes a specific type of chip. I'm going to spare y'all the name. But these are basically the brains that power artificial intelligence systems. China, look, they want the chips because they want to be able to compete in the AI race. And we all know that AI is where the future is. So here's what Trump did. He went full deal maker. Some people may say full mafia mode. Instead of just saying, no, you can't sell to China, he said, all right, you can sell to China, but I want my cut. And we're not talking about a small cut. We're talking about a 15% cut of every dollar they make from the sales goes directly to the US government. Now, understand, this is revenue sharing, not profit sharing. So if Nvidia sells $1 billion worth of chips to China, the federal government is going to get $150 million right off the top. That's before Nvidia pays their employees, before research and development costs, before manufacturing expenses. Uncle Sam said, hey, I'm getting my piece first. The company said yes, because they're smart and the math makes sense. 85% of billions is better than 100% of zero. They've been locked out of China, watching other companies there take the market share. So they took the deal. So let's talk through what the numbers actually look like, because we not talking about a little bit of money, y'all. Like, it's some serious bread on the table with this deal. So we're looking at maybe billions in revenue from China. Morgan Stanley estimated that AMD alone could generate $3 to $5 billion in revenue if the restrictions were lifted. So even after giving up the 15%, they're still gonna be making $2.5 to $4 billion with a B in revenue. For context, it's some countries whose GDP is less than $2.5 to $4 billion. All right. So this is big money talk. What's interesting, when this deal was announced, both companies' stock prices went up. Nvidia's stock price rose modestly. AMD was over 2% gain. The market is saying this is a net positive because market access is worth more than the revenue cut. This creates a new recurring revenue stream that could generate hundreds of $1 million to billions of dollars annually. And it's ongoing. Every year, these companies sell these chips, the government is going to be getting paid. It's like having a royalty deal in the music industry. All right. This puts China in an interesting position too. See, they get access to the technology they need, but they're effectively paying a tax to the American government every time they buy it. It's like having to pay a middleman who doesn't provide any service, but has the power to cut off your supply. And this matters beyond tech. This isn't just about computer chips. This is about power dynamics and how international business is going to work moving forward. What America just did is find a way to profit from China's technological ambitions while maintaining control over the supply chain. Instead of complete economic separation, we've created a managed engagement where America benefits financially. For the companies involved, look, they're navigating a sensitive space, right? Because there are competing interests here. Nvidia's statement was very diplomatic. It said something like, "We follow rules the US government sets for our participation in worldwide markets. America's AI tech stack can be the world standard if we race." Look, that's corporate speak for we want to compete globally and we'll work within whatever framework you give us. AMD, they're a little more straight up. All right. So AMD, they just confirmed their export licenses were approved. No big statements, just facts. Okay. They're not trying to rub no shoulders or make nobody feel good. Like, it is what it is. The broader implication is that we may be seeing the birth of a new model where the government becomes a financial partner in private companies, international operations, especially in strategic sectors. Now, China, they not just chilling while all of this is going on, because they find themselves in a complicated spot with this arrangement as well. First, they're raising questions about potential security vulnerabilities in American chips, basically asking whether there's a way that the US can hack into their technology using these chips. And you think about some of the beef that's been going on between China and the US, that's a very fair concern for them to have. China's media has criticized this arrangement, saying that it proves America's export restrictions were never really about security, they were about economic leverage. One Chinese publication argued that the US government has repudiated its original security justification to pressure US chip makers to secure export licenses to China through economic leverage. They not happy, y'all. That's what they're saying. Here's the real problem. They need the chips. All that talking, but they need the chips. So Chinese companies are trying to compete in AI and advanced computing while they're developing domestic alternatives through some of their Chinese companies. They're still years behind American technology in some areas. So China is stuck paying what amounts to an American tax on technology they desperately need while also accelerating their efforts to become technologically independent. One thing you'll learn about me, since everybody is new to this channel, is I love history. So it's not a big deal for me to go back and look at historical precedent for this type of arrangement. And honestly, there aren't many clear examples of this ever happening before. Traditionally, US export controls have been binary. Either they can export something or they can't. Simple as that. The government might require licensing or impose restrictions, but they haven't typically demanded ongoing revenue sharing from private companies for the privilege of doing business internationally. The closest parallel might be royalty arrangements where companies pay the government for access to public resources. Think about oil companies paying royalties to drill on federal land. But that's different because that involves like public access, public assets as well. This is the government taking a cut of private companies selling private products to foreign customers. Some constitutional law experts have raised questions about whether this arrangement even violates the Constitution's prohibition on export taxes. Now, the administration is calling it a licensing fee rather than a tax. but the economic effect is the same. What we're seeing is essentially the creation of new rules in real time. There's no established legal framework for this type of government business partnership in international trade. The big question every business owner and every investor is asking is, could this model spread to other industries? Most analysts think it will probably stay limited to the semiconductors in the near term because chips are uniquely strategic. They're the foundation of everything from electronics to even military systems. The government treats semiconductors differently than other products because of their national security implications. But let's think about what other sectors might be considered strategically important. So we took a little bit of time. All right, we did some digging, we did some analysis to see if there are some other sectors that could make sense for this type of strategic agreement. And here's something we came up with: advanced manufacturing equipment, pharmaceutical products with dual use potential, clean energy and battery technology. Here's a big one: aerospace and satellite technology, and even certain software and AI systems, which you already know. The president has been set that the government can demand revenue sharing in exchange for export licenses. That's the deal. Companies have shown they'll accept these terms if you get them in the market. So we're already there. As one expert put it, I read this: semiconductor is a very unique business, and the pay to play tactic, it may actually work. Other businesses, think Apple, think Meta, they can be a little bit more complicated when it comes to their business models and their services to China. But business models can be adapted and government policies can evolve, right? We're seeing it. They're evolving before our eyes. If you're thinking there seems to be a legal piece of this that needs to be resolved, and you're absolutely right. And they haven't been. The Constitution specifically prohibits the federal government from taxing exports. It exists in Article 1, Section 9. We looked it up. The founders included this because they wanted to prevent the federal government from interfering with interstate and international commerce. It's bad for business. The current administration is framing this as a licensing fee. They just changing the name. But again, the economic implications are the same. Companies are having to pay the federal government for access to certain markets. We do have legal experts that are divided on this situation, probably because of their politics, but I'm not going to judge them. Some are arguing that this clearly violates the Constitution. Others, they like national security concerns and other government interests that takes precedent over export licenses. Side with who you believe. This is likely headed for the courts eventually. The outcome could determine whether this model can legally expand to other sectors or whether it needs to be restructured. This isn't just a US thing and a China thing. These type of arrangements, they don't happen in isolation. The international business community, they paying close attention to see if this becomes a template for other countries. If the US can demand revenue sharing for market access, what prevents China from requiring similar arrangements from American companies operating there? You know that's coming next. We saw that happen with the tariffs. What about Europe demanding cuts from US tech companies? It goes on and on and on. We could be looking at the beginning of a more transactional approach to international trade where every country wants a piece of foreign companies' profits. Now, there's another perspective that says this type of arrangement keeps America engaged rather than completely decoupled from China. Instead of total economic separation, we maintain involvement while ensuring American benefits financially. It just seems like something somebody says when they're trying to get their point across. The challenge is that this approach could increase costs and complexity for international business operations, not to mention set a bad precedent. Companies will need to factor government partnership fees into their international expansion strategies moving forward. So let me tell you what I think, because seeing how the Trump administration has moved in the past, I don't think that this is the end. I don't think this is a one-time deal. This is going to start with semiconductors, but gradually expand to other technologies the government considers strategic. We'll probably see similar arrangements for quantum computing, advanced materials, maybe certain AI software. It becomes a new tool in the government's toolkit for managing trade with strategic competitors. The best case for businesses is the model stays limited to a few highly strategic sectors, providing predictable rules for international expansion and actually strengthening American companies' competitive position by keeping them in important markets rather than keeping them out completely while their competitors benefit. And the worst case scenario is probably what you're already thinking. This becomes the standard practice across multiple industries, across other countries as they retaliate with similar demand. International business becomes significantly more complex and more expensive, and we end up fragmenting global markets. You think tariff wars are bad, this could take it to a whole nother level. So, a couple things that I'm watching. I'm looking for legal challenges and court decisions, how other strategic sectors may be impacted. I really want to know whether China implements some type of retaliatory measures. There's going to be an international reaction from allies and trading partners because they have the same concerns that we have. The key variable is whether this stays targeted or becomes broadly applied. The answer will determine whether this is a smart strategic adjustment or the beginning of a more problematic trend. Let's talk about some investment considerations. All right, so if you're a company with a strong international revenue stream and what's considered by the US government to be a strategic sector, you might face some margin pressure as the government looks to get their cut. But market access often justifies the cost. Both Nvidia and AMD saw their stocks rise on the news. This could actually strengthen American companies' competitive positions in some cases. We're watching American trade policy evolve from ideological to transactional. For decades, US trade policy has largely been based on principles like free trade, market access, level playing fields. Now we're seeing a more pragmatic approach where the government says we'll allow market access, but we want our piece. This arrangement is simultaneously smart, but it's a little concerning as well. It's smart because it keeps American companies competitive in crucial markets while ensuring the US government benefits financially. It maintains American influence rather than ceding markets entirely to its competitors. But it's concerning for all of the reasons that we've already talked about, because it sets precedents that can make international business more complex and expensive across the board. It also raises legitimate questions about the proper role of government and private enterprises. Here's a reality. This is probably the new normal. The era of simple free trade is evolving. It's evolving into something more complex where governments are active participants in international commerce, especially strategic sectors. Whether you see this as good policy or overreach, you can't ignore it. This is going to influence how American companies approach international markets for years to come. For me, to go a little bit deeper, I think it's good for the markets. If you're talking about companies operating in companies where they don't have a footprint at all, that increases revenue. But there's this crazy thing about precedent that where it starts with one thing and then it slowly expands to be something else. So where we see it as beneficial, if a company doesn't operate in a country it currently exists in, what about companies who are already operating in a strategic sector where they're already generating revenue and then the federal government comes asking for a piece? That may not be as favorable from a market perspective. So yeah, we're going to stay tapped in on this. You know, I'm going to always break things down for the everyday investor. Make sure you subscribe, share this with a friend. I'll see you on the next episode.